Move on. So we are now downhill. So we are now going, well, by the way, are you doing crossing out? It's good for your endorphin, right? Are you crossing out? It's good for your brain. So we crossed out cash, we crossed out receivable, we crossed out merchandise inventory, we also crossed out accounts payable, check off, right? We also crossed out the sales, we crossed out cost of goods sold, all right? So what's the next one in terms of operating expenses besides merchandise? Do you see the salaries expense? All right. So salaries expense, and then salaries payable. How does that relate to? Salaries payable in the balance sheet, and salaries expense and income statement. The income statement salaries expense says $14,000. What does that mean? $14,000 salaries expense recognized in income statement. What does that imply? Alice. It's a 14,000 salaries expense is equal to salaries paid. That's a good question. That's the reason why we are doing chapter 17, but it is also checking your knowledge in accounting 1A. Salaries expense income statement means you recognize $14,000 of salaries expense all throughout the year. However, at least not necessarily you pay in cash. Oh, you don't have to pay cash for people's salary? I like that. If I'm an employer, I pay your salary but no cash. It sounds a little funny, right? But what is it? How come you don't have to pay salaries expense all in cash? Because salaries payable, what does that mean? Accrued liability. Why you have a salaries payable account exist?
It's not yet payday yet?
Because it's not payday yet. I like that, right? So how do you go about doing that? Salaries payable is increased or decreased? Decreased by how much? 5,000. So should we add or subtract? What's the number I'm studying? Well, same pattern, right? I'm starting with 14,000. Everybody else? Right? So is it increase or decrease? Yeah. Salaries payable during the year? What happened? 5,000? Decrease, right? However, should we add or subtract? Add is correct. Can I ask you why?
Because during the year you actually paid $5,000 that you owed.
That's right. Again, payable, we talked about that accounts payable gone up. Is that good or bad for cash? Good for your cash, am I right? Payable gone down is good or bad? For your cash. So you have to add, because we are talking about cash outlay. Are you following? Again, it didn't work, don't worry, we have T accounts. Salaries payable, please do not look at this yet, okay? Please follow my tip of pen. 9,000 salaries payable, beginning balance was given. 4,000 salaries payable, ending balance is given in the balance sheet. And $14,000, what's $14,000 represents, please? No.
Cash.
I've been saying that. Salaries expense, right? What was the journal entry? Salaries expense journal entry. Accounting 1A, don't look at this. What was the journal entry? Debit, salaries expense, credit, salaries payable. See, chapter 17, you keep on what? Keep on checking your knowledge of accounting 1A. You keep telling me, Mr. Instructor, go back to the admissions office, adjusting their grade 1A. Keep on telling me. Or you forgot, right? You got A in accounting 1A, you forgot. It's not new, right? Debit, salaries, expense, credit, salary, is that new? But if you pay cash, salaries expense, of course, debit, salaries expense, credit, cash. If it's payday. Am I right? But if it's not payday yet, because of accrual basis accounting, you have to do debit, salaries, expense, credit, salaries, payable. Yeah, that journal entry you momentarily just forgot. Right? Now you remember, then it makes sense, 14,000 credit. Did I lose anybody? Did I lose you, Edmund? So what's the missing piece then? Now look at this, right? Mathematically, what's the missing piece? Salaries payable what? Debit or credit? Salaries payable, debit or credit? You're looking at the answer over there. It's right. Salaries payable, right? Why do you think I ask is salaries payable debit or credit? Because if salaries payable debit, where's credit?
Cash.
What does that mean? Credit cash. When did we learn? Wow, which chapter I'm talking about? Credit cash means, please look at it. Credit cash means, you're looking at me like I'm talking about Greek or something, right? See, I told you over and over again, chapter 17 is all about checking your previous knowledge. Did you really understood? Metacognition. I said that, right? Including myself. How do I know what I know? How do I know what I don't know? I don't know. Exactly. Right? So it's good for your brain. All right, so we finished. What section did we finish? Yeah. So that's it. In terms of operating activity, that's it. So 97, 56. By the way, 97 is cash inflow, 56 is cash outflow, 19,000 is cash outflow. How about the subtotal? 22. Okay. So now we move on to investing activity. What's the investing activity all about? Buying and selling, PP&E, right? Property, plant, equipment, or building, land, all that. So did we have those activities? Yes, it's given. How do I know that? Well, take a look at this. Changing this. Did you cross this line out? This cross this line out? This cross this line out? Now right here, equipment. What happened to equipment? 27 to 30,000. What happened? Year to year. Increased by 3,000. Why it is increased? Is there any way you can increase machinery without buying it? Let's say this machinery equipment account drop. Then what can you inform if it drop? Using your common sense. You must either sold or put it out on the in the curve. Please take me. Please take me. What? We learned this, chapter 10, guys. Discarding, right? Dispose. Right, that's all. So it went up means you must purchase a new machine. I don't know, new or old, but you must have some addition. Can I say that? But can I say you must purchase machinery $3,000 worth? No is the right answer. How come? No is the right answer.
Can.
Right, because please do not assume that too quickly, because what does it say? Oh, what does it say right here? Sold equipment. That cost, original cost was $6,000. How much did you get for cash? $4,000 cash. Accumulated depreciation at the time of sales was $5,000. Can I ask you a question? What was the book value of that old machine you sold at the time of sales? 1,000. Very good, Joanne. Right? 1,000. Am I right? Original cost of that machine, I don't know how many years we have used, but whatever that machine was, we sold that for how much?
4,000.
Implies cash, am I right? So can we go back to chapter 10 now? At least the chapter 10 is accounting 1B. So that means a little bit closer in your memory, right? So equipment. David, Jerry, Joanne, David, or credit, you want to do whatever do. I'm talking about the one we just read. Debit cash, very good. 4,000, very good. What did you do?
Machine, equipment.
It's the equipment, debit or credit?
Credit.
Credit, I already wrote it, credit side.
Yeah.
I was ahead of you. What was the original price, cost? But every equipment, every machine has a slave husband, right? Companion account. What's the name of slave husband?
Accumulated depreciation.
Nope. I have to deduct a point, or I have to change a grade if you say depreciation. Accumulated depreciation. Depreciation is not an account. If you say depreciation expense, you are talking about wrong house. I ask you who is the payer account of equipment. Equipment belongs to where? What's the house?
Asset.
Balance sheet. Which bedroom? Asset bedroom. So husband and wife has to be in the same bedroom. So accumulated depreciation known as AD. I just made up. I don't want to write it out. Accumulated depreciation. So is the wife still alive? No, wife just died. Right? So husband has to die. What was husband? Short-term memory, right? Yeah. Right here? How much? 5,000. Yeah, I'm doing chapter 10 review right now. Is it debit equal to credit?
No.
Is it debit equal to credit? Hello? No. So what's the plug? What's the plug? What side?